Let me introduce myself. My name is Alvina Damianti, Accounting Class 23A. Income Tax Article 26 is a tax imposed on income earned by non-resident taxpayers, NRTs, from sources in Indonesia. This tax is regulated under the income tax law and ensures that NRTs earning income from Indonesia pay taxes to the state. Taxpayers subject to Income Tax Article 26. The taxpayers subject to Income Tax Article 26 are non-resident taxpayers, NRTs, which include 1. Individuals who do not reside or are not domiciled in Indonesia but earn income from sources in Indonesia. 2. Entities that are not established or do not have a legal presence in Indonesia but earn income from Indonesia. Income subject to tax under Article 26. The taxable income under Article 26 includes all income earned by NRTs from Indonesia, both periodic and non-periodic. Examples of taxable income include 1. Dividends, profit sharing distributed to shareholders. 2. Interest, income from loans or deposits. 3. Royalties, compensation for the use of copyrights, patents, or licenses. 4. Rent, income from renting land, buildings, or other properties. 5. Service fees, payments for services provided by NRTs to entities in Indonesia. 6. Prizes or awards, income from prizes or rewards related to activities in Indonesia. Tax rates for Income Tax Article 26. 1. 20% of gross income for most income types, such as interest, dividends, and royalties. 2. A lower rate may apply if there is a tax treaty, double taxation avoidance agreement, between Indonesia and the taxpayer's country of origin. The tax treaty rate is applicable only if the NRT provides a certificate of domicile, COD. Withholding and payment of Income Tax Article 26. The party responsible for withholding and paying Income Tax Article 26 is the income payer in Indonesia, such as companies, institutions, or individuals paying the NRT. Steps for withholding. 1. Calculate the tax based on the applicable rate. 2. Withhold the tax before making the payment to the NRT. 3. Pay the withheld tax to the state treasury through designated banks. Reporting of Income Tax Article 26. The withholding agent must report the tax withheld through the monthly tax return for Income Tax Article 26, submitted to the Directorate General of Taxes, DGT, no later than the 20th of the following month. Example of tax calculation. PTXYZ pays royalties of IDR 1 billion to a foreign company. The foreign company's country has a tax treaty with Indonesia that sets a royalty tax rate of 10%. Calculation. 1. Without a tax treaty, IDR 1 billion times 20% equals IDR 200 million. 2. With a tax treaty, IDR 1 billion times 10% equals IDR 100 million. PTXYZ must withhold the tax based on the treaty rate, if COD is provided, and pay IDR 100 million to the state treasury. Penalties for non-compliance. Failure to properly withhold or pay Income Tax Article the 26th of May result in penalties, such as 1. Administrative fines, 2% per month of the unpaid tax. 2. Criminal sanctions for deliberate fraud or evasion. Conclusion. Income Tax Article 26 applies to income earned by NRTs from Indonesian sources, with a standard tax rate of 20% or a lower rate based on tax treaties. This tax is withheld and paid by the income payer in Indonesia. Compliance with this regulation is essential to avoid penalties and support state revenue.